This is Small Business Big World, our weekly podcast prepared by the team at Paper Trails. Owning and running a small business is hard. Each week, we'll dive into the challenges, headaches, trends, fun, and excitement of running a small business. After all, small businesses are the heartbeat of America, and our team is here to keep them beating. Welcome to Small Business Big World, our weekly podcast where we talk about all the fun and exciting things about being a small business owner. A little housekeeping before we get going. Don't forget to like, follow, share, subscribe, rate, review. We are everywhere: Apple Podcasts, Spotify, YouTube, TikTok, Instagram, Facebook. If you are out there, we're out there, and you can find us out there too. So today, my guest is Connor Kennedy of Acadia Benefits. Welcome back, Connor. Thank you for joining us.
Thank you for having me, Chris.
So today, we're going to talk about why is my health insurance so goddamn expensive, right? I certainly know our health insurance premiums, I write Anthem hundreds of thousands of dollars a year worth of checks in my business. And certainly I think that's very common among other businesses. So there's been a lot of changes in the last few years. I feel like every year our premiums go up 10 or 15% or more sometimes. And it's been always the game to try to figure out. I think we all as business owners feel like, my only choice is to do cheaper, offer less good plans, worse plans, Iess, right? Higher deductibles and all that kind of stuff. We all hear those things. So I figured it'd be good for us to chat and see why these things are so expensive.
Yeah, and I think today what we really want to focus on is the increases we're seeing specifically in Maine and in the small group market. We'll spend too much time if we talk about larger customers today, but I think we'll talk about the community rated small group market where a lot of Maine's built on small businesses. So
Absolutely.
I think this will be good for a lot.
So let's start right there. So what does that mean? I'm community rated. I'm a small business.
Yeah,
what does
absolutely.
that mean?
So in Maine, if you have under 50 benefit eligible employees in the preceding calendar year, you were considered a small employer and you are in the community market. So you're not rated based on your experience, right? How
many claims there are.
The health of your population. You're rated based on the age of your population, the location of your population. In Maine, as we were talking about before this, right, we are one of the oldest, if not the oldest state in the U.S.
Mm-hmm.
So, and we live in the Northeast, which is known for being the most expensive place to receive healthcare.
Mm-hmm.
So with just those two factors right there, you know that we are going to be in a bubble of, high rates.
Right. So many of these things we're going to talk about today, or most of these things are very Maine specific, but certainly many of them may apply in other states. Every state has different insurance laws, different insurance policies. I was saying before, health insurance is just about as exciting as payroll. It's about watching paint dry, right? There's lots of details, lots of minutia. We're going to try to keep it high level to make sure that everyone understands that. But there's been a lot of changes in Maine the last few years, right?
Mm-hmm.
The first one we were talking about earlier is kind of that merging of the markets, right? Explain to me what happened with that and why that has made an impact.
Yeah, so back in 23, a lot of you who are listening may recall Maine decided to merge the individual market with the small group market to
And the individual markets, you're out on healthcare.gov.
Exactly. You have your own
insurance.
individual plan as opposed to having a group insurance coverage through your employer. And one of the main reasons to do this was to standardize plans so you can get the same plan through your employer as you could in the individual market. So standardizing the rates. So, for example, my age, if you had an age-banded policy, the same rate I could get through a small employer would essentially be the same rate you could get on the individual marketplace. What we know is that individual plans historically before this were more expensive than having a group policy. That's really not the case today with the merged market.
Okay. So when we talk about that, that also applies now because the individual mandate from ACA has been wiped away, right? So we've merged those markets, which means we have two different populations, and now one of those populations doesn't have to get insurance anymore, right? So that's kind of made a difference too, right?
Yeah, exactly. And these two items are not directly impacting 2024 rates, which I'll talk about in a little bit, but everything compounds on top of each other. So like you just said, when the individual mandate went away or I guess, took effect in 2019, when people weren't penalized for not having health care anymore, you can look at that in a couple ways, but, one of the things that we've seen or starting to see now is, there could be younger individuals that aren't going to be penalized anymore for not having health care, right? And as you take people out of the pool and only people who need the policy are paying into the policy, right, incurring claims, you can start to see costs go up. So that's kind of a trend we're seeing, over the past few
Slowly
years.
impacting things, right? It's a
Exactly.
compounding factor, right? There's lots of things we're going to talk about today,
Yep.
and all of them add up to say, gosh, it's really expensive to get health insurance. So
Yep.
we were talking, explain to me about, you're talking about level funding plans and how that works. And that's another one of these incremental changes that have been made, right?
Yeah, absolutely. So level funding's a great solution for many employers. Now, if you're over 11 employees in the state of Maine, you can get a level funded quote from your broker. Now, they don't work great for everyone. Carriers tend to identify which group a level funded policy will work for. And just to back up a little bit, a level funded policy takes you out of the small group community rated system. You're underwritten specifically on your population. So, if you have a young, healthy population that's not incurring a lot of claims, doesn't have ongoing high cost claim or risk or taking very expensive drugs, a level funded policy could be great for your company. And there's a lot of positives with it. You can even get some dollars back at the end of the year if you run better than expected. I'm not going to go into detail about all that, but some will say, like we were talking about with the individual mandate, as you start to pull healthy risk out of a big pool of a population, that can start to affect individual and small group rates over time.
Right. So more costs, more, just a little bit more every time, right?
Yep,
Another chip
absolutely.
in the armor. So,
Yep.
What about, you had mentioned something about the ICRAs, the HRAs. What's going on with those too?
Yeah, so how I want to talk about ICHRAs today is specifically not for small employers, ICHRAs, but we've seen some large employers that have lots of high cost claims on their books, right? Every single year they're getting 30% increases plus. And this is that tough employee range where, say, 51 to 100, right? You're not big enough to really be able to handle some of those high cost claims, and then you're not small enough to be in the community market. So what an ICHRA allows employers to do is to essentially term their group coverage, give individuals a reimbursement to buy a policy through the individual marketplace. So what we've seen is some employers, right, who can't, which rightfully so, can't handle these 30% increases year after year after year, are able to kind of put that claim risk back into the individual marketplace and continue to pay their reimbursement every year. So it is a cost saver for some large employers. But again, we're talking about compounding, things that are happening here as we're putting.
Well, you're taking more people out of the pool, right?
Right.
You keep going back to that.
And you're putting bad risk into the pool, right? So it's we're seeing. I don't think we're seeing the effects of that yet. I think that is possibly to come.
Right, because this is one big actuarial formula somewhere.
Mm-hmm.
There's a bunch of geeks in a room somewhere that know way more about this than we do, I'm sure, but that are really crunching the numbers and saying, okay, we need this many healthy people to pay for this many sick people to,
Absolutely.
To get to the end of the day, what's it cost you every month?
Yep.
And certainly that's, a very complicated formula that I will probably never understand. I mean, I get the gist of it, but
Yep.
So in Maine, we've had some legislative adjustments that have really started to drive the change in rates, right? And a lot of them are great. A lot of them are improvements, requiring the carriers to be offering certain things, which is wonderful benefit.
Yes.
But obviously those come at a cost, right? So
Yeah.
so what's been going on in the legislature that's causing some of those things?
Yeah, just, carriers are companies just like everyone else where, if they are being required to take on an added risk, they're going to increase their cost. And so who has to pay for that? It's the members, right? Your premium is going to go up. So in 24, there were a lot of significant state mandates that went into place that carriers were required to cover certain services. And the one that really drove a lot of claim costs was access to fertility care. We've heard from different carriers that added anywhere from 2.5% to 3% on rates. So say we're talking about a an 8 to 10% average trend increase every single year for pharmacy and medical. Not talking about everything that we've talked about already. That's just talking about medical and pharmacy. When we start to add in these state mandates, we're talking about another 2.5 to 3% that's added in. And like you said perfectly before, is these benefits are great for people, right? This is a positive for people, but someone has to pay for it, right? So it's going to come back down to the members that are enrolling in the policies to pick up that cost.
Right. What other types of? I mean, certainly fertility is the big one. We certainly know fertility treatment is not cheap, right? And that's coming in there. What are some of the other ones that have been out there that really have made the changes?
Sure. I mean, there's a list of about 5 of them here. Remove barriers to abortion coverage. Promote better dental care for cancer survivors, improve outcomes for persons with limb loss. The main driver, though, that we've heard from the carriers that were going to put the most risk on them to increase their rates was the fertility care. Yes, absolutely.
Interesting. Yeah. And I think certainly, again, as the more you have to cover, the more it's going to cost to do that.
Absolutely, and it's a great benefit for the people that need it, right?
Right.
It's now that they have a, and obviously the carrier is going to have prior authorization requirements, and they're going to put barriers in place to make sure it's appropriate for that employee or member. But with it being required to be covered, the rates are going to increase.
That's good. Interesting. So talk to me. The other thing we talked about was this guaranteed reinsurance program, which kind of, when we talked about this, I'm like, I didn't even know this existed. And I'm sure most people do. Can you explain what it is and what changed that it's causing some issues?
You may not know, but today you're paying about $4. I think it's $4 per employee enrolled that the carrier is paying to McGarrah, which is the Maine Guarantee Access Reinsurance Association. So that's probably somewhat new to people. They probably haven't heard McGarrah before, but McGarrah, basically what it is that all the carriers pay into this reinsurance TPA, this reinsurance program, and if they are reimbursed for certain high cost claims that members incur. So for 23, for example, carriers were reimbursed 100% for all claims between $90K and $275, right? So if I had a cancer claim that was in that $90K to $275, the carriers will be reimbursed by the McGarrah for that claim, right?
So it's insurance for the insurance company.
For insurance, exactly. Now, the parameters of McGarrah is changing for 24, and this is a big cost driver. I think on average, our small group block got hit with about a 15% increase this year for 2024. So
don't tell me that. You're coming to me in a couple months with changes. Don't tell me that.
Yep. So we'll talk about that in a little bit. But so that's what we're seeing almost on average, right? So one of the big changes that happened with McGarrah is that carriers will now be reimbursed 75%. So not 100% anymore, right? They're being reimbursed 75% for high cost claims between $135 and $275. So we've lessened the coinsurance, right, that carriers are getting. That now it's 75, and we've shortened up
the window.
The window, exactly. So carriers look at that and say, "Oh no," but again, like we talked about, they're not going to take on this added risk, right? This risk is going to be pushed back down to the payers who are paying the premium. So that's one of the reasons why we will see, I think an abnormal increase in 24 is I think my note here is, or is it about 1/3 of the increase rates for 2024 has specifically come from McGarrah.
Wow. There we go.
Yep.
Can't wait to see our renewal.
Yep.
So, aside from all of these legislative changes and the mechanics of the changing marketplace, we've been feeling the increased cost of life everywhere, and that doesn't stop at the drugstore or at the hospital, right?
Yep.
All those are going up as well.
Yep.
And that's driving added costs to the insurance companies, which they're passing on, right?
Exactly. Everything's going up. Right. And we had talked about earlier, normal, whether it's new technology, new drugs, normal inflation, medical and pharmacy is anywhere between 8 to 10% any year. Like that's what you should be budgeting for. Now it's different with all small groups, right? Whether you bring on a few younger individuals at renewal, maybe a couple older individuals drop off, vice versa, right? This can go both ways with lots of different companies, but on average, that's what it will be. Now, when we start to talk about everything we talked about today, emerged market, level funding, ICHRAs, Maine's one of the oldest populations in the country. The Magera, right? You start to tack on everything. You can see how this average increase of 15 to 18% is what we are seeing in the small group market.
Which is scary for all of these small business owners out there. Certainly, I think,
Absolutely.
I think we all feel the need to be, or, that we should be providing for our employees
Yep.
and making sure that is. What are you seeing, what levers and switches are you seeing people, your clients use to manage these costs
Yeah.
and these increases?
Yeah, so in the small group market, right, it's very rigid. So it's all about shifting cost. So I guess we can talk about shifting cost in two ways. You can shift cost through plan design, right? So you're shifting cost to people that use the plan. So not everyone hits their deductible out of pocket every year, right?
Mhm.
It's a very few. So that's probably the most common thing that we'll see, right? Most brokers will show you a bunch of alternates at every single renewal. Say you got a $1,500 deductible plan with a $5,000 out-of-pocket max, something like that. To take down some of that 15, you may be looking at a 3,000 deductible with, a $9,000 out-of-pocket max, right? It's just shifting cost in that way. Maybe you want to put a dual option in, right? And you as the employer can say, hey, I'm going to pay I'm going to pay 80% of the low cost option. If you want to buy the higher option, you pay the difference, right? So there's cost modeling changes that you can do as well. And that'd be the second portion of shifting cost, what you as the employer are going to do with your contribution strategy.
And we see a lot of clients that are using HSAs and things like that. The employer is putting into an HSA to help you cover a higher deductible or something like that too, right?
Absolutely.
Because that may make a difference.
High deductible health plans are very common in the Northeast, and we had talked about a lot of this last time too when we spoke, but HSAs are, I think that they're great. They require more employee education, but when you put them in and employees are used to them, I think they value them. And the key piece about a qualified high deductible health plan is pairing that with the health savings account, paying a lower premium, and then having an employer or yourself fund an HSA that rolls over every year is a great way to build, we call it the healthcare 401k.
Sure, which that's a whole different conversation
Yep.
probably. But, what are you doing with that education? Because I know my employees in particular, they're great, but forever, right? Everyone's used to just going to the doctor and paying my $25 and walking out.
Yep.
And how are you changing that mindset of, no, guess what? That doctor's appointment is now $180 and you have to pay that out of your HSA or out of your pocket until you get to whatever point, right?
Yeah, we think most of the time employees will just see an open enrollment presentation maybe once a year, right? Something that we do at Acadia Benefits is that we can provide recordings. We call them, benefit education recordings. So we could look at the benefit plans that you have today. We'll do a recording on what's covered, anything that's new for 24, anything to keep an eye out for, right? Hey, this copay went up here like you're talking about, or hey, it's deductible co-insurance now on that tier 4 drug, keep an eye out for that, things like that, right? So then you can have that recording available for employees to watch whenever they'd like.
It's interesting. I think it's just really changing the mindset. And certainly I think healthcare is trying to, the whole market is trying to change people to being much more consumer driven and oriented and saying, hey, maybe you can get your MRI, at the trailer down the street. You don't have to go to the big shiny hospital. An MRI is an MRI, right?
Right.
Certainly I think many people, myself probably included, is like, I need to take care of myself. I need to have the best care, whatever. And that might mean going to the Taj Mahal. It might not, right?
Yeah, it's people, they design the plan so people can make their decisions, right? The message we always push, if it's not an emergency, stay out of the emergency room, right? You're going to get to deductible co-insurance there. Go to the urgent care. It's more often a copay unless you're on a high deductible health plan, but it's going to be a much lower out-of-pocket cost to you if you hit that urgent care. But of course, if it's an emergency, don't go to the emergency.
Sure. This is my brain's spinning and all the things and reasons that this is, things are so expensive. And certainly I think we'll continue to see things evolve as the legislature acts, as costs continue to rise. And I don't think this is anything that's going to go away anytime soon, unfortunately. But I think it's been really helpful to me as a small business owner to understand all of these things that are going into it. So thank you very much.
Absolutely. And we were talking just, as your renewal coming out, or as all, employers' renewals are coming up, make sure when you're getting your quote, right, that you're able to see alternates from alternate carriers, right? I think, especially in the small group marketplace, you really want to look at what's available to you, because you never know when a carrier is going to be competitive or not, right? We've seen some carriers be very competitive in Q1 and Q2. They've raised their rates a ton for Q3, Q4, right? And now other carriers are more competitive. So it's looking across the board, looking at the plan options and the carriers available.
One of the things you've been great about is giving us that spreadsheet with, I feel like 150 options.
All right, then we get on the call and narrow it down.
Right, which usually I look at about 4 columns, right? I really don't care about all this, but it's really helpful to see that and see what's out there. And so that, and certainly we've talked with mutual clients and said, you're going to get that. You're going to have the 150 options to choose from, which is really helpful when trying to make decisions. And that's when that plan design and things like that kind of come into place. So, Well, good. Well, thank you so much, Connor. It's great to have you back and chat about this brain-numbing topic for sure.
We could do it again, so thanks for having me.
Well, we'll do it again for sure. There's plenty more, maybe that, the healthcare 401k HSA conversation.
Absolutely.
That's one to have too, for sure. So awesome. Well, thank you very much for joining us. Be sure to like, follow, share, subscribe, rate, review everywhere you are. If you have any questions for us, you can always email us, podcast@papertrails.com. We're happy to get you in touch. How do people get in touch with you, Connor? What's the best way? Instagram, email?
LinkedIn. Connor Kennedy, Acadia Benefits. You can always reach out, contact us through our website as well. And then someone from Acadia Benefits will get in touch with you mostly same day.
Awesome. Well, thanks everyone for listening, and we'll see you next week. Thanks for listening to this week's episode of Small Business, Big World. This podcast is a production of Paper Trails. We are a payroll and HR company based in Kennebunk, Maine, and we serve small and mid-sized businesses across New England and the country. If you found this podcast helpful, don't forget to follow us at @PaperTrailsPayroll across all social media platforms, and check us out at papertrails.com for more information. As a reminder, the views, opinions, and thoughts expressed are the hosts and guests alone. The material presented in this podcast is for general information purposes only and should not be considered legal or financial advice. By inviting this guest to our podcast, Paper Trails does not imply endorsement of or opposition to any specific individual, organization, product, or service.